Hey. What's up, my fellow wealth adventurers? It's your friend, Alex, and welcome back to the channel. Have you noticed how everything around us, from electric cars and solar panels to chargers, is desperately thirsty for one metal? That's right, the so-called new oil, copper. Today, we're diving deep into the world's copper mining behemoth, Freeport-McMoRan, ticker symbol FCX. Many of you have asked if this stock is still a buy, given its recent rise. I'm breaking down everything you need to know about FCX, based on data up to mid-October 2025, covering fundamentals, technicals, institutional sentiment, and key support, resistance, and stop-loss levels. Let's start with the fundamentals. FCX primarily sells copper, which is crucial because the world is rapidly moving towards electrification and decarbonization. EVs, wind power, and solar energy all devour copper, making FCX a key player in a megatrend. Their operating margin is excellent, around 26.96%. Analysts project solid earnings per share growth for 2026 and beyond, suggesting FCX's intrinsic value looks good, with some even considering it undervalued. However, FCX faces two main challenges: the volatile copper price, which makes its stock highly sensitive to market fluctuations, and issues at its Grauberg mine in Indonesia. Recent incidents and potential production cuts at Grauberg, along with geopolitical and regulatory issues, can create short-term drag on the stock, with production not expected to return to pre-incident levels until 2027. In summary, FCX has an exciting long-term story, holding the key to the future, but short-term, you must pay close attention to copper prices. Next, let's look at the stock's vibe check, technicals, and institutional sentiment. Over 87% of FCX shares are held by institutions, indicating strong confidence from the big players. The short interest is quite low, around 1.5%, meaning few are betting against this stock right now. These stats suggest professional players believe in FCX's long-term direction. As of mid-October, the stock trades around the $40 to $42 range. Despite recent choppiness, the medium to long-term trend, signaled by moving averages, shows a bullish or strong buy signal. The 52-week range is $27.66 to $51.45, so we're not at the peak, leaving room for a run-up. The 200-day moving average at $39.76 also suggests a buy. Now, for the most actionable part, key price levels based on technical analysis and analyst targets. Remember, this is my view, not financial gospel. Resistance levels are $47 to $48.50, the first hurdle aligning with average analyst targets, and $50 to $51.50, the all-time high region. A convincing break above $50 to $51.50 could signal a massive bullish move. Expect selling pressure at the first hurdle as traders take profits. Support levels are $39 to $40, a critical psychological and technical floor, and $35, a midterm strong defense where buyers are likely to step in. For risk management, I suggest a stop loss at $38, just below the $39 to $40 support zone. If it drops below $38, the short-term trend is likely broken. Discipline is your most important tool in trading. Set that stop loss to sleep better at night. FCX's future outlook can be summarized in 3 words: long-term bullish. As the world invests in clean energy, copper demand will explode, but supply can't keep up. Analysts predict copper prices could soar due to this structural shortage. This is FCX's biggest fuel. FCX is aggressively increasing output through low-cost leaching technology, recovering copper from waste rock, and bringing their new integrated Indonesia smelter online. These projects mean higher output and better margins. Freeport achieved an incremental run rate of 200 million pounds a year of copper through these initiatives in 2024. So FCX is more than just a mining company. It's a direct ticket to the global energy transition megatrend. While short-term volatility might shake things up, the long-term picture looks incredibly compelling. And that's the deep dive on FCX. I hope this friend-to-friend analysis gives you a clearer view for your investing decisions. Remember, the market is a jungle, and you need to be smart. This is Alex's analysis, not your sole investment advice. Always do your own due diligence. If you loved this video, please hit that like button, subscribe, and most importantly, tap that notification bell so you don't miss my next wealth adventure. Drop a comment below if you have any questions or stocks you want me to cover next. See you then, and safe trading. Bye.